Morning, everyone. Let's talk about recency bias, why it's so hard to hold Bitcoin, and why holding Bitcoin often means slowly getting rich while feeling frustrated 90% of the time, which is a quote I love. I did not invent it. It's just a quote I heard somewhere that I really like. Okay, so first of all, let's talk about recency bias because that's a fundamental problem with any investing, which is the human brain always remembers when you're investing. It always remembers if you're holding an asset, it remembers the highest price that it saw recently. Okay, so my brain has locked $111,000 in it because Bitcoin was $111,000 like last week or whatever it was. So every price under $111,000 feels down. And it's going to feel down for months and months until, let's say, if we drop down some and then we start climbing, then it starts feeling like we're up, even if we haven't passed 111. But the recency bias means that you're almost always going to remember the highest price you recently saw, and every price in comparison is going to feel low. Now, the problem is every time you set a new price, one second here, it resets that recency bias. So let's assume we go up to 115,000. As soon as we drop from 115 to 114, 113, 111, 112, whatever, all of those numbers are going to feel down. They're all going to feel low. Even if we go to 115 and then we hang around at 112 for a week or two, that entire time we're hanging out at 112 feels down. Why does it feel down? Well, because we touched 115. And your brain, it's like one of those, whenever you're like a church switchboard for audio, where like you see the audio levels go up and down, but like once they set a new high, it like that top line sort of stays there at that new high, even if the audio immediately drops until a little while. That's the way recency bias works, which is it's constantly getting reset every time you hit a new higher high. It gets reset. And that becomes your new recency bias, and everything else feels down, which means Bitcoin feels down almost all the time because no asset is constantly creeping up tiny bits by tiny bits for all the reasons I've talked about in numerous videos in the past. The way Bitcoin and all other assets work, it's not unique to Bitcoin, is that all assets that have high growth potential are volatile, meaning they go up and down a lot on their way up. And whether you're holding Amazon, Apple, Tesla, Nvidia, Microsoft, Google, Facebook, any of the Magnificent Seven stocks, which are the seven highest performing stocks in the last decade or so, all of those, if you held that stock and you fixated on it and you thought about it a lot and you checked the price regularly, would do the exact same thing to you. The recency bias would result in it constantly feeling like it was down. Now, the problem is it's the reverse if you're trying to buy more Bitcoin. If you're trying to buy more Bitcoin, every price other than whatever the most recent low was feels high. So the most recent low was 74,000 something a couple months ago, which we dipped down there like for a matter of days or hours. It was not very long. So basically, almost nobody bought Bitcoin less than $80,000 because we were below $80,000 for such a short period of time. But if the number's a number that's not down in the 70s or 80,000s or 90,000s, it just feels like hold on one second here. Forgot to program a location, so my magic Tesla here is taking me to just it's just randomly driving forward. If you don't give a Tesla a location, it just drives. It just drives and it just takes turns and it follows whatever it thinks is an intuitive path, but it has no destination by it. So anyway, um, so if you're trying to buy Bitcoin, you get the reverse problem, which is every number feels high, and so it's constantly feeling when you're buying Bitcoin like you're buying it for an expensive price. So I have never bought Bitcoin for a price that felt super low. I mean, maybe, but let's put it this way. The percent of my Bitcoin that I own that I felt like I was buying at a steep discount is a very tiny percent because every other amount of Bitcoin I bought when the price was off, the all-time lows, which means I was buying it even though I could remember a number recently that was lower than the price I was buying at. Because again, you're never going to catch an exact, low spot. So you're constantly with any investment that you have a lot in, you're constantly buying it when you feel like it's expensive, and then as soon as you buy it, it feels like it's down from the number that felt high, and the number that feels high is constantly changing because the high every time you hit a new high, it's your brain updates. So that's why, again, like I say, the famous saying in investing is, especially Bitcoin specifically. I have not heard this about investing in general. I have heard this about Bitcoin, which is that holding Bitcoin involves getting rich while feeling frustrated 90% of the time. And I can tell you in my own personal journey, from the lowest Bitcoin I ever bought, which was 6,400. And of course, even that $6,400 Bitcoin that I bought way back in the day, which is up like 15x, the price immediately dipped after I bought it. So even the cheapest Bitcoin I've ever bought felt bad because the price dipped into the 4,000s shortly after I bought $6,400 Bitcoin. So every price I've ever paid, the price has dipped after I bought it, making it feel like the price I paid was expensive. And the vast majority of time I've held Bitcoin, which is since 2017, it has felt like it was down from all-time highs because any asset only hits all-time highs infrequently. So even though it's been the best performing asset over the last 10 years, as compared to anything, literally anything, Bitcoin has outperformed every other asset over the last 10 years. The vast majority of that time, it has felt like it was down. It has felt like if you bought it at an expensive price. And if you had to sell any for any reason to, you know, fix a repair on your house or car or whatever it is, then it immediately feels like Bitcoin goes up right after you sell it. So that is the nature of investing again, because that is just the way your brain operates. Now, an interesting aside is your brain operates the same way with regard to gut reactions. So people are constantly telling me when they take a test, I got I got a question wrong. And my gut was telling me to change it, and I didn't, and I knew I should have changed it, and then I got it wrong. Well, you remember that one. What you don't remember is the times that your gut told you to change something and you didn't change it and you got it right. So once again, everybody remembers their gut feelings when their gut feeling ended up being right, and they forget what their gut feeling felt like when their gut feeling ended up being wrong. Or they only remember it when it was right and it was affirmed, or it was right and they didn't change their answer. And as a result, everybody feels like they have a really good gut feeling. The truth is, in my opinion, gut feelings are very unpredictable, and I you know I don't know. I think gut feelings are overrated because everybody seems to have a gut feeling and they all seem to be wrong most of the time. But people only seem to remember when their gut feeling was right and then things didn't turn out, or whatever. So it works the same in investing. Also in investing, everybody remembers the things they almost bought but didn't when they were right. So for example, I can remember thinking, wow, I remember distinctly thinking, wow, Apple stock is on sale. This is like back in 2011 or something like that. Apple stock is really on sale. It's way down because everybody's worried that sort of Apple is over. I should buy some Apple stock. I distinctly remember having that feeling, but I didn't actually do it. I didn't actually buy the Apple stock back in 2011 or 2012 or whatever it was that Apple was in a big dip. I didn't actually do it, but that's what I remember. I remember thinking I should have. But what I don't remember is all the times I thought, ooh, I should buy that. And then the stock tanked. Um, and I never thought about it again because why would I have any reason to think? I mean, my brain does not want to tell me I almost made a mistake. It was a close call and my gut was wrong. My brain does not want to tell me that. My brain wants to tell me that my gut feeling is really good and that I should have followed my gut. And if so, I would have been right. Or that I did follow my gut and I was right. So anyway, so the same with investing. Everybody remembers the Bitcoin price, the highest it's been, instead of zooming out and thinking, okay, but let's look at some perspective here. So holding Bitcoin is hard. Holding Bitcoin has always been hard. It will never stop being hard because by the time Bitcoin is no longer volatile, it will be fully adopted worldwide. It's not going to be not volatile until it's widely adopted. And as soon as it's widely adopted, you'll regret the fact that the vast majority of the investment upside is behind you. Then nobody will complain about volatility anymore. And the recency bias problem will go away, and everybody will just complain that Bitcoin only goes up a few percentage points per year because it's universally adopted money, which means there's no more adoption to drive the price higher. It only goes higher based on human productivity growth, which is about 3% per year. So when Bitcoin is the universal worldwide money, and the price of each Bitcoin is somewhere between $1 million or even north of $10 million per coin, in that world, everybody will just complain that, it's not fair that all the people who bought Bitcoin earlier, got Bitcoin when it was cheap, and it's not fair. Well, they can buy it right now. Everybody can buy it right now. Bitcoin is a universally available money that anyone in the world can buy right now. But there will be people in the future complaining. So even when you're all done getting rich by being frustrated 90% of the time, then it's not like you've reached, panacea. Then you got to deal with all the people complaining that it's not fair that the people who bought Bitcoin early, are in a much better financial position. Then you got to deal with all those people telling you you got lucky. And none of them are going to want to hear that it was really hard to hold, that it was frustrating 90% of the time, and that, it constantly felt like it was down. Because everybody who didn't buy a lot of Bitcoin will all feel like your experience with buying Bitcoin is you just bought it and then you got rich and it was so easy, and it's not fair because not everybody did that. And they will have zero appreciation for how hard it is to hold Bitcoin over the long haul, consistently hold Bitcoin, hold Bitcoin, hold Bitcoin. So anyway, holding Bitcoin is hard, but it's still the best investment in the world. I still think it's a great investment at $105,000 per coin. And if you zoom out, Bitcoin's only been higher than today's price in 10 days of its entire 16 years. And anyway, so that's pretty amazing. So anyway, exciting times should be ahead. The Federal Reserve is about to print a ton of money. If you haven't, go watch the Jack Mallers podcast episode that I posted last night, which should hit podcast feeds this morning if it hasn't already. They do the live feed on YouTube Live, and then they reproduce it for podcasts. But the Fed's about to print a ton of money, like a ton of money, and it's going to matter a lot how much Bitcoin you own before that massive mega money printing happens, as opposed to after that massive mega money printing happens. So have a great day, everyone. Thanks so much.